Welcome back to another episode of Mortgage Chicks with Hot Tips. I'm Diana Harvey.
I'm Elizabeth Hole.
I'm Kim Hairsted.
I'm Cindy Walker.
And I'm Stacey Van Skank.
I just want to remind everybody before we get started to be sure to like, subscribe, and share to this episode. Today, we are going to talk about closing costs, the costs involved in getting a loan, which are the closing costs and the prepaids. So let me just start by giving a little explanation of closing costs and what they are. I'm going to make it real simple and say the cost to get a loan. So to explain that in a little more detail, it's things like our lender fees, any fees that we charge, appraisal, credit report, title fees. In Florida, there's some taxes that other states don't have, and that's part of the closing costs. So basically, it's any actual cost that are involved to get the loan. But those costs do not include things like prepaids. So Stacey, why don't you explain what prepaids are?
Yeah, everyone gets hung up on what is prepaids? What does that mean? Prepaids are simply the taxes and insurance that are required on a home in order to get a loan. So something important to know is in the state of Florida, insurance is paid up front. You're going to pay at closing, and it can be rolled into paid at the closing table. It doesn't have to be paid before you go to closing, depending on the insurance company. Mm-hmm. You pay for the first year of insurance up front, plus they're going to start an escrow account, so next year when the insurance comes due, they have enough money, just like taxes. The buyer, the owner of the property, will pay for that first year of taxes, but the seller's going to credit from January 1st till closing for the amount of time that they owned the home. So they pay for their fair share. So that is what's called prepaids, taxes and insurance. And then people always ask all the time, well, how do you calculate prepaids? And what I do is I have my clients get an insurance quote up front. I'm not an insurance agent, and I'm not going to try and be an insurance agent, and I don't have a crystal ball. I don't know how much insurance is going to cost, so I always have my clients get the insurance quote up front. And then we can go to the county website, the tax collector's websites, and kind of figure out how much the current taxes are. And then what we do at Van Dyke is we're going to calculate the new property taxes when they become owner of record. It's important because if a seller's owned a house for a very long time, then the new owner, it's going to be assessed at the new sales price. There could be a large swing in taxes, and we don't want to set our customers up to fail. We want them to succeed, so we are going to go look up what are the taxes going to do, how are they going to change when you become the owner, and that's going to prevent a shortage. I had kids the other day, they're buying a house that the seller's owned for 23 years. The taxes were $1,436 when I did on the Pinellas County Tax Estimator, $5,900.
Big difference.
I qualified enough, that's what they expect that in their payment.
Yeah, so they're not in shock when they get their tax bill the next year. You forewarn them, and they're good to go.
They're going to be good to go, and they're not going to be, mad calling saying, why did my payment go up?
Right, and that's so very important because even in some cases where I had one this week where the gentleman who owned it before was investment, so he had no homestead exemption at all.
Or save our homes
Or
cap.
save our homes cap, and the taxes went from $3,500 a year to $6,700 a year because of the values that are going up. So being able to talk with your buyers and help them absorb that shock is wonderful.
Yes.
It's very important.
So we discussed the closing costs or the actual cost to get the loan, and the prepaid items are the items that kind of go along with the house, the property taxes and the homeowner's insurance. So can these closing costs and prepaids be included in with the loan?
The million-dollar question, Diana, the one we get all the time. Unfortunately, on a purchase transaction, the answer is no. However, if you're looking at doing a refinance transaction, we can wrap in the closing costs in those types of transactions. But however, if you're doing a purchase transaction, you do have to be able to be prepared to pay your own closing costs and prepaids. Now, in some cases on the prepaids, they can be waived. Now, that doesn't mean you don't have to collect them at closing. Let's be very sure about that. But what that means, what Stacey alluded to, was setting up escrow for the following year. If you're diligent about saving your money and having an account set up, and you've put 20% down or more, you can pay your own property taxes and hazard insurance. However, flood insurance is absolutely still going to be required to be escrowed no matter how much you put down. So that's the answer to that question.
Awesome, good tip to know. So what about the seller paying any of those costs? Cindy, can the seller pay any of them?
Absolutely. In a perfect market, Now, I'm going to say right now, we're in a seller's market. So it's really getting harder to get seller to pay closing costs unless they're up in the sales price to include that. So like on a $250 sales price, if you're asking the seller to pay closing cost of 3%, then you're going to want to build that into the sales price. Otherwise, you're asking the seller to net like $7,500 less on their offer, and it's not going to happen. There's bidding wars out there right now. But just to give you an example, on a conventional loan, if a buyer is putting 10% or more down, the seller is allowed to pay 6% of their closing costs. So now if they're putting less than 10% down, then the seller is limited to only being able to pay 3% of the sales price towards their closing cost. If they're putting 25% or more down, they can pay their own closing costs. But the seller is allowed to pay 9% of their closing costs. I don't ever see that because when they have that much down, they're not going to ask the seller to pay their closing costs. But just to let you know, FHA loans, the seller is allowed to pay up to 6% of the sales price towards the closing cost. And VA loans, the seller is allowed to pay all their closing costs. They don't put a cap on it. Big misconception out there that the seller is limited to pay 4% of the sales price towards their closing costs, but that's only if the closing costs are uncustomary, like points. So we don't really see that happen. But definitely, I know that's a lot of info, but seller is allowed to pay closing costs in a good market. Right now, it's a tough market, so.
So the seller can pay them, it's just they're not real likely to do that
Exactly.
right
It
now.
may
Exactly.
weaken the
It's
offer.
also
Yeah.
important to know if you're buying it as an investment property, if we, the lender, are calling it an investment property, the cap
2%.
is 2%
Right.
of the purchase price. So when we keep talking about percentages, it's of purchase price, and it's 2% for investment properties, period, end of
Exactly.
story.
Which again, unfortunately, their sellers aren't doing right now. But
Yeah.
it can be done.
It
It
can.
technically can
It
be
can.
done. So Kim, tell us, when are these closing costs and prepaids due?
With the closing cost, they're all mostly collected at the time of closing. Some of the things that we do pay outside of closing are home inspections and appraisal fees. The appraisal fees we collect up front. Also, sometimes some title agents will collect for the survey, or make you write a letter saying that you're going to pay that survey if this loan does not close. But everything else is collected at the time of closing. And if you prepay any of your insurance policies or anything like that, we are going to have to track where those funds came from.
Right.
Because we don't want you to just pay your flood insurance and then we don't know where it came from. So all those things have to be tracked, but it's best just to pay them at the time of closing. Some flood policies and flood insurance companies will collect their flood upfront outside of closing because they want that before they bind the insurance. But otherwise, everything is paid at the time of closing.
Now, in some cases, isn't it, especially in our state with insurances, you want to make sure you get that policy bound.
Before a hurricane.
Amen, sister.
Yeah, if
Before
it's
that
in a
storm
window.
gets in a box.
There you go.
Yep.
And also, I think we also missed the interest, the upfront interest that's collected as
Prepaids.
well.
Right.
That's part of the prepaids. So make sure everybody goes, oh, what's this for the 3 days? And why do I have to make my payment and, not until March? And I closed in January because we're collecting interest in arrears just like we collect taxes in arrears. So when you make your January payment, you're actually paying your December interest. So we're going to collect those amount of days along with the other prepaid items.
So we discussed closing costs or the cost to actually get the loan, what's involved with all of that. Prepaids are the taxes and insurance that go along with the property. Unfortunately, they cannot be included in with the loan. Occasionally, they can be waived, but not always. You can ask for the seller to pay some of them, but they probably won't right now, unfortunately. And for the most part, they're collected, all of these fees are collected at the time of closing. Just a few of them are collected ahead of time, but then that money is then credited back towards the funds to close. So hopefully we have covered the full gamut of closing costs and prepaids to give you guys a great idea of what costs are involved with getting a loan.
Don't forget to like, subscribe, and share.
If you have any questions or ideas for future podcasts, please email us at mortgagechicks@vandykemortgage.com.
Make sure to like us on Facebook at Mortgage Chicks with Hot Tips.
Hey, and don't forget about Spotify. You can listen to us there or wherever else that you listen to your podcasts.
Thanks so much, everybody. See you next week.